Well, I thought David Bacher and the team at Corian had really cracked it when they were able to produce the previous month's results of investment markets and the way they performed within a few days of the month end. They've surpassed even that today. It's the 1st of August, and here we're going to be talking about what happened in the month of July. Well, David, I'm very pleased, being somebody who's invested the BizNews portfolio in big tech, that we had a rollicking day yesterday. Otherwise, it would have looked pretty bad for the tech shares over the month as a whole. Even so, it wasn't the best month for NVIDIA and some of the other stocks that have been making all the running. But congrats to you guys for getting everything done and the beautiful presentation that we're going to be going through in just a moment in less than 24 hours. A new benchmark, I'm afraid.
Thanks. I suppose at Corian we try and wrap up the market in some kind of a theme. So it was obvious for us to go for the Olympic theme. So we had a nice framework to get our minds around over the last month. So it sort of made it easier for us to just put the numbers in those so-called different events. So it was definitely, we have finished the report about 9 this morning, but a lot of work went in prior months to get it to where it is now.
No, that's for sure. And really interesting, again, as we are going to be seeing exactly how the month panned out. Let's get that report up there. Can you see okay, David? Is it up on your screen?
It is indeed.
All right. So there we have it, Olympic style, the month of July. Have you been watching the performances so far? I missed the one bronze, which was in mountain biking, I think, but certainly watching the Springboks. And wow, our young double gold winner, Tanya Smith, wasn't that quite something? Lifted the nation.
Correct. Well, hopefully she gets the double gold tonight. I think she's in the final of the second one. But yes, like all South Africans at Corian, we're deeply patriotic and passionate about our sports. So I have indeed been watching the Olympics, and tonight I'll be glued to the TV.
A lot of people don't realize this, but she brought back 66% of South Africa's medals at the last game with her gold and silver, and now she's got 100% of the golds this time around. This lady is quite an asset to the country. So let's hope that, as you say, that it's a good Olympic, or the Olympic continues to uplift us. However, it wasn't a good month starting in the month of July for the big techs or US tech shares. Just take us through what happened there and why we saw such significant declines in some of the big names.
I think it's truly remarkable. If you think of the biggest company in the world now is NVIDIA. And if you look at its share price, it's almost behaving like a small cap. It was down almost 20% up until yesterday, and it was up about 12% yesterday. Now, that's not really common for your biggest share in the world. So definitely very interesting to see. At Corian, we don't monitor things by a day or let alone a month, but that kind of market dynamic is very hard to ignore. But to answer your question, the poor performance of mega cap shares was the standout of last month. Their underperformance was due to a combination of factors, including some disappointing second quarter earnings, a shift in investor focus towards smaller caps, which seemed more appealing amid broader market dynamics.
And you can see on the screen now the decline of Meta and Microsoft as well. And these have been very good performance for the year to date. Are we now to believe that tide has turned?
Still a bit too early to say that. Last month on the show, we were predicting that it had run too far, and it certainly in the month of July seemed to be that case. But 1 month's data is a bit too early. But what we focus at Corian is valuations and compared to the rest of the market, where small caps and mid caps, even in the US, has been largely ignored in what has been a mega tech rally, sustained rally, we hope and we do believe that it's the start of a turnaround.
Breaking down into the different Olympic events. So this one you call the 100 meters. Explain exactly what we're seeing on screen here.
We titled it 100 meters because it is only a month, so it is a bit of a dash in terms of investing and the long-term investment plan. But what we're seeing on the screen is the UK and South Africa winning the race. They were up over 4%, 4.5 and 4.9%, while the two bigger economies, America and China, were only slightly up. So it was a nice month for South African investors. In dollar terms, the currency also appreciated. So certainly if it was a race, South Africa and UK would be winning. And it's actually quite interesting to note that our market is actually quite similar to the UK in many drivers. Both markets have very large financial sectors, cyclical companies, and shares that are considered value shares, which the whole value investing had a really good month. And both countries had recent elections, and both those elections illustrated political stability, which is obviously favored by the market, and hence our market and the UK really outperformed global equities.
And of course, the United States, where there have been some huge changes on the political side in the past month.
Correct. We called this the relay, and following Kamala Harris's emergence as the leading Democratic presidential candidates, markets have shown some mixed reactions. Typically, financial markets tend to respond to political events based on their anticipated policy changes. Historically, democratic policies could imply stricter regulations on industries such as finance and energy, and potentially more supportive for renewable energy and healthcare and social programs. But it really has as I said earlier, a mixed impact on the market, and it's a bit too early to tell.
What exactly is the Trump trade, which we hear so much about recently?
I'm not sure if that trade still exists, because the Trump trade was perceived as favorable for markets, lowering of taxes, much more business friendly, but tax rates have already been slashed in America. The debt is very, very high. So even if he does come in, one can definitely argue it probably be more favorable for markets, but what could his impact from these levels of a very historically low tax rate? I'm not quite sure that that trade still exists.
It is interesting as well that since Biden moved out of the race, that Kamala Harris has received much support in the polls, at least. It looked like a one-horse race with Trump just sailing into the White House. Now it's close.
Correct. It's going to be an interesting 3 months or so of viewership, where unfortunately in today's time you just listen to much more about the insults and sound bites as opposed to understanding policy. And hopefully this election, people just focus on what the actual discussions and what the candidates are saying, as opposed to the insults that just tend to flow quite frequently.
US inflation, though, is an area where whatever happens on the political front, this is something that investors need to pay attention to.
Correct. On this slide, we labeled it boxing. We thought boxing analogy was very apt, as opposed in the economic ring, the US Fed has been like a seasoned fighter against a tough opponent, being inflation. So there have been 11 rounds of interest rate increases, and it appears that high inflation is almost on the canvas. The market reacted very favorably to the last print, which was 3% inflation, when the market was expecting, I think, 3.3%. So we think that Mr. Powell certainly has eventually won, or is winning this fight.
And lower interest rates not that far away. Cycling, that's an interesting sport for you to pick for your next slide.
At Corine, we believe in cycles. I suppose cycles might be a bit of a stretch, but we thought it was appropriate. Over the last 15 years, investors have witnessed one of the longest and most pronounced periods of outperformance of growth shares over value shares, and last month was very different. So, as I said earlier, hopefully we've entered into the start of a new race where value shares come to the fore, because certainly that's our view, and that's how we started to position the portfolios.
It also makes investing a lot more sensible, doesn't it? Where you can take the numbers that you see in a balance sheet and an income statement and extrapolate that to the valuation. Mr. Market doesn't dominate, or the narratives don't dominate as much as the facts.
Correct. And also, hopefully the market isn't just driven by a handful of shares, where you can look a bit broader and it's not theme-based. It's back to basics.
A triathlon, property, bonds, equities, all had a good run in the past month, these from the South African perspective.
Yeah, all three investment disciplines, namely equities, bonds, and cash, delivered very strong returns. In fact, the so-called splits of these assets stroke events were uncannily almost equal, all up 4%. So, investors seem to be, turning their pessimism on the South African market to a more bullish outlook. You can see a lot of fund managers in the market also starting to beat the drum and in calling that SA shares have been undervalued. And as I said earlier, we had a very good market-friendly, favorable political outcome last month. So that was a driver of our asset class returns.
It feels almost as though asset managers were taking their time to assess, or not just here, but around the world, the impact of that election. And now they're getting a little more comfortable with the government of national unity being sustainable, rather than, there were many commentators, and I was having a look yesterday through our numbers for the month of July, many commentators who were saying that GNU would not last, it was fragile, and as a consequence of that, don't believe it. But perhaps we are seeing a change in that thought.
It's probably too early to tell. What I think is clear is that it's definitely better than what could have been the outcome. So you might have a pessimistic view on the GNU and how sustainable it is, but would most investors have taken the position that we are in today as opposed to where it could have been looking back 2 months ago? And I would imagine everyone would have said yes. So, you don't need to this to be sustainable in terms of how the market has got to where it has got today.
On to the other returns from local sectors. Take us through the differences there.
So our market was mainly driven by resources and financials. Both were up over 5% for the month. Resources, a lot of commodity prices, particularly gold being the standout, really appreciated strongly. So our resource sector appreciated on the back of that. And financials shares, which is probably your most sensitive to where interest rates are going, and also maybe a bit of a temperature gauge for the sentiment to the country, also benefit from that pro-South Africa sector rotation theme. So resources and financials really pulled up our local market.
Been watching the First Rand share price quite closely, because that is in the BizNews portfolio, and that was in the early 60s going into the election, and it's now over 80 Rand a share. So it just shows that these aren't exactly boring shares anymore. The banks, they seem to be going in the right direction. But for every winner, there's a loser. There's not always in markets. Some that are going down. I see that you've highlighted these as well.
Correct. It might be a bit hard on these shares because out of the top 40, we picked the 3 worst performing shares and illustrate them. So, Bidvest being one of them, down almost 4%, is not a massive fall. But a reminder to investors, Bidvest had a very strong rally the month before on the back of some corporate announcements. So I suppose one can expect a little bit of a softening of the share price. And then, Anglo American, a pretty similar kind of outcome. Obviously, that had a very strong rally on the back of a potential bid from BHP that ran very strong, and it gave up some of its gains. It also did report half-year results during the month, and perhaps the markets thought that there's headwinds for the restructuring plan, so that dropped about 4%. And then MTN still getting impacted primarily from its poor forex exposure to MTN Nigeria, which really is hampering their earnings.
The FTSE winners for the month?
FTSE winners, some big moves here. We've got British American Tobacco, which rallied almost 14%. They came out with some good results. Their new age products seem to be growing a bit quicker than the market expected. They've got a lot of cash. They're reducing their debt on their balance sheet a lot quicker than investors thought. So that was up strongly. And then the 2 resource shares, Gold Fields, obviously on the back of a very strong gold price, rallied almost 17%. And Anglo Platinum came out with a trading result, which had good production numbers and a stronger commodity price, and that was up 17.5%. So, good results from those shares. But as I said, good results from many equity shares in South Africa over the previous month.
It's nice to see that the Anglo Platinum share price is finally lifting up its head. There is good news for the company going into the future, being separated again from Anglo American. But you'd almost think that perhaps the time to be investing there would only be after that spin-off. It has been spun off, but that isn't the case at all if it's up by 17% in the last month. And looking ahead, David, your view on where the markets might be going in the next month, given we've had so much turbulence over the past 31 days?
If you focus on fundamentals, you don't change your view very quickly. And 1 month's worth of data and doesn't mean that you need to get out of the trade. We see a continuation of value shares coming back in vogue, of non-US shares being the place to be. In other words, investing in places like Europe, China, South Africa, as opposed to the mega caps. So we're pretty much going against where I would imagine a lot of retail investors have been going, because everyone knows about a NVIDIA, everyone knows about a Microsoft, everyone knows about an Apple. It's got some brand awareness. It's you have the fear of missing out syndrome. So we position a bit contrary to many, and we hope and we believe that last month will be the start of a new trend.
David Wacher is with Corian Capital, and I'm Alec Hogg from BizNews.com.